Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you, over 420 subscribers currently. On this channel, we cover dividend growth investing, portfolio updates like this one we're about to jump into every Sunday, as well as a stock pick series Monday through Thursday, where I look at a stock that's pulled back on the day or one that I'm looking for pullbacks in the future to potentially add to my watch list or invest in altogether. So we did add $2,008 in new capital to the portfolio. If you've been watching the channel for a while, you know a couple weeks back, I did not invest on a weekly in one of the weeks that I typically do, and I took that $1,300 and I put it over into my Ally account with it, where I have a high yield savings. And so I pulled some of those funds back. The market has pulled back a little bit. Some of the stocks I'm looking to buy are in more fair value territory. So I've added a little more than normal. Again, $2,008 to the portfolio. And if you like content like this, dividend growth investing, like some portfolio updates like this one, the stock pick of the day series, where I look at a little bit of a deep dive, go ahead and hit that subscribe button down below. Hit the notification bell so you are notified whenever we post any new content, and join me on this journey to financial freedom. So let's jump into the video. We will start with dividends, any dividends paid out for the week. And actually, this should have been part of last week's video. On the 13th, we had a couple that came in late, or at least they posted in my account late, or I didn't catch them whenever I was looking through. So on the 13th, we did have additional additions last week. So we're going to cover those first, and then we'll get into this week's update. And we'll start with Leggett & Platt, ticker LEG, out of the consumer discretionary sector. They did pay out $64.61, again on January 13th. And with that $64.61, the DRIP is set, so that means dividend reinvestment plan, which basically means whenever any position in the portfolio, in this case Leggett & Platt, pays out dividends, it automatically goes in and buys more shares of the same company, right? So here, that $64.61 bought 1.82493 shares at $35.40. And it'll buy them at whatever the current market rate is, right? You don't really have a choice on that. Whatever it is, they're going to buy it at that rate. And then the next one that paid out dividends on the 13th was Realty Income Corp, ticker O. This is a REIT out of the real estate sector. They paid out $26.26. This is a monthly paying REIT, so that's every month, right? And this will continue to grow as this compounds. And with that $26.26, it bought 0.39807 shares, right? So fractional shares, not quite a full or even a half share here, but over the course of the year, it will add up. And all told, those $90.87 in dividends paid out added $4 excuse me, added $4.39 in additional passive income over this next year. Now we will jump into this week's activity. The only payout so far was, maybe there would be something, I'm recording this on Saturday, so at the end of the day, typically I'll get another update. So if something does pay out after this update, I'll include it in next week's video. But Owens & Corning's did pay out on the 19th, January 19th. I should have changed this date here. And they paid out $4.16 in dividends. And again, Owens Corning, ticker OC, is out of the industrial sector. And that $4.16 bought fractional shares, 0.04762. So again, another fraction of a share. And that $4.16 added a whopping 6 cents in passive income over this next year. But I'll take every little bit that I can. And I did add to this position. We'll see that here in a moment. So that is the activity on January 19th. And then the buys for the week. This was the only day that I added anything. It was actually January 20th. Should have changed that date as well. So apologies for that. But the only activity, I did all my buying on Friday early in the morning. And actually, I'm glad I did it early in the morning, because by the end of the day, a lot of these stocks that were down were up significantly. So what I bought them at is not what they are currently at, or not what they closed the day out at. So hopefully next week we'll see a bit of more pullback, unless this runs up again. But anyway, we added $2,008.05 here. And with that new capital, We added 5 shares of Ally Financial, ticker ALLY. This is out of the financial sector. We picked up those 5 shares at $29.49 per share. We added 6 shares of Omega Healthcare Investors, ticker OHI. We added, and this is a REIT out of the real estate sector here. We added those 6 shares at $28.07. We added Prudential Financial, another out of the financial sector, ticker PRU, and we added those 2 shares at $97.59. We added 10 more shares of Verizon Communications, ticker VZ. I like these under $40, so it was just under 40, and we added those 10 shares at $39.67. We added 8 more shares. Like I said, we did add Owens & Corning, basically doubling my position here. I had 8 shares before this, so we doubled this up. Owens & Corning is out of the industrial sector. I'm sorry if I didn't mention Verizon Communications is out of the communications sector. But Owens & Corning, 8 shares at $86.87. And I added to my HP position, ticker HPQ, out of the information technology sector, 15 shares at $27.03. All told, this $2,008.05 added $84.63 in passive income over the next year. Total invested again, $2,008.05. And the total passive income added for the week, the dividends paid out we saw on the 2 previous slides, along with this $84.63, amounts to $89.08 in new capital, passive income added to the portfolio over the next year with these buys and with the dividends paid out. So that is the dividend snowball in effect. Keeps on growing over time, right? Now a quick run through the overall portfolio. Total value of the portfolio sits at $112,571.29, pretty close to where it sat last week. Like I said, there was a bit of a pullback, even though I added 2,000 in new funds. It didn't really move the overall portfolio amount. Dividend yield has crept back up a little bit. Like I said, some of these have pulled back, so the dividend yield, they're inversely correlated, right? So as the market goes up, dividend yield typically goes down. As the market goes down, dividend yield typically goes up. So that's actually why it's important to buy on the red days. Whenever the yield is higher, that will increase your yield in your portfolio as well. The more that you do that, the more that you can buy below your cost basis, bring that cost basis down, bring that yield up, the better your yield will be. And maybe I'll add yield on cost, because actually my yield on cost is a little higher than this even. So, and this is what it's all about: the passive income, the dividend, annual dividend income provided by the portfolio, paid out whether the market is up, whether the market's down, whether the market's floating sideways, and this snowball continues to grow as I add new capital, as the positions in the portfolio pay out dividends, and they go back in and reinvest and buy more shares of those companies as well. Currently sits at $5,713.32. Very nice to see this growth, and it is growing by about $80 to $100 a week at this point. So very nice to see. Now let's run through the sector weights real quickly. Communication sector is sitting at 9.32% of the portfolio. Consumer discretionary sitting at 8.38. Consumer staples sitting at 5.76. This is actually one I'd like to increase. If Procter & Gamble, it's starting to come down. If it continues to come down, eventually I will add to that position, and that will increase this position here. So I'm hoping that it continues to come down. It's not quite there yet, but it's getting close. Healthcare is sitting at energy is sitting at 8.54%. Financials, the largest piece of the pie, is sitting at 15.63%. Healthcare is sitting at 8.09%. Industrials has crept up a little bit with the recent additions to Owens Corning. It's sitting at 3.23%, and that's one I'm going to build out. I really want to build out my Owens Corning position. It has a very low dividend payout with a very high dividend growth right now. And technology sitting at 12.98%. Materials sitting at 13.51. Utilities, no utilities currently. There are a couple that I am watching. When they hit fair value or reach what I feel is fair value, I will add them back into the portfolio, but not yet. REITs and real estate sitting at 14.56, and I do not have any ETFs, but I will say something here on ETFs. I believe you can look at ETFs if you are managing your own portfolio, right? That's why I named this channel Vested Interest. It's in your vested interest to take your control of your financial freedom and your financial future and monitor your own portfolio, right? And that, to me, buying an ETF, you can put it on autopilot. Buy an ETF in a sector that you like, or the overall market, S&P 500, or the NASDAQ, or pick a sector of the market and you'll find an ETF for it. But you could also create your own ETF. And if you like an ETF, you can literally look at that ETF and say the top 10, 15 positions. I like this ETF, so I'm going to invest in each one of these companies in their top 15 positions. Now, then you would have to monitor it yourself, right? But you don't have to pay the fee. Even if it's a small fee, you're paying someone to do something that you can do yourself. But like I said, if you want a hands-off approach, ETFs are a good way to do it. I'm actually considering some ETFs for my daughter's custodial account, so I don't have to manage 3 different accounts. And I'm also going to meet a buddy of mine today. His father passed away. Rest in peace, Red. And sorry for your loss, Lloyd. That's my friend. And I'm going to meet him today, and I'm going to help him set up a couple custodial accounts for his kids. And what I'm going to do is I'm going to actually look at some of the ETFs I've been looking at. I'm going to use those ETFs. Maybe I'll do a video about those ETFs that I use, because he wants a very hands-off approach. He doesn't have the time or want to do the investigative research that I would recommend on individual stocks, and then monitoring those stocks over time to make sure they still meet the criteria that you bought them at. And if they don't, taking them out of the portfolio, right? There is some management there that you are required to do if you do individual stocks. So don't think that you can just buy your favorite companies and then walk away from it and don't worry about it. You do want to monitor how those companies are doing from quarter to quarter, or at least once or twice a year, to make sure they're still meeting the criteria you set up initially. Again, if you want a real hands-off approach, ETFs are a way to go. You just realize you are going to be paying a small fee for someone else to manage the ETF. Okay, so I don't have any in mind. I manage my own portfolio, but it is a passive way to invest if you don't want to do the research or don't feel like you can do the research. But I think anyone that can do simple math and can read can do the research by just a little bit of educating yourself on how to do this stuff. There's a lot of YouTube channels out there. Mine is not the best one for a beginner investor. Maybe it's more in line with someone who's already investing to see how to build out a portfolio, or portfolio updates if you like that sort of thing, or the stock pick of the day series where I'm looking at different stocks that may have pulled back in fair range to look at. So I do want to cover some more educational videos on beginner investing, so there will be some of those coming up. But again, this is my hobby. I don't make any money off this. This is not something I do as a job or on a full-time basis. Maybe someday I'll get there, but right now I have a full-time job and 2 daughters that I have to spend time with as well. So I will post more videos like that in the future for some of you newer investors out there. Well, that is really it for this one. I really appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel and join me on this journey to financial freedom. For those of you who have already joined the channel and subscribed, I really do appreciate it. Again, thank you so much. And drop a comment down below. Let me know what you think of the video. Let me know what activity you had in your portfolio this week. What dividends were you paid? What companies paid out dividends for you? What positions did you add to your portfolio? Or if you have existing positions where you bought new shares and increased those positions. Let me know in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and put it all down below. I will respond to comments on the day I post the video, maybe the day after, but some comments now I'm getting, from videos I posted 3, 4, or 5 months ago, and I just don't have the time to go and respond to all of them. So apologies if I have not responded to one of your comments. I try to get as many responses as I can, and like I said, I do try to monitor the day that I post at least that video. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation and select the criteria or seek the advice and counsel of a certified financial advisor.